I welcome everyone to the next session on streamlining finance for DRE. In this session, we'll unpack why promising projects often struggle to get finance, not because the technology itself fails, but because of a range of issues, including missing data, unclear ownership, uh, revenue streams that are hard to underwrite, and weak utilization. So we bring together developers, MFIs, banks, and funders to deep dive into what kind of business models and performance signals actually truly unlock the capital, and so that the finance moves in sync with the realities on the ground. So I'd like to request panelists to please come on stage. Mr. Ganesh Neelam, Director at Sustain Plus. Ms. Mahenaw Wara, Program Manager, Good Energies Foundation. Mr. Ramakrishna NK, Co-founder and MD, Rangde. Mr. John Inch Kalori, Associate Directors of Programs at ESAF Foundation. Mr. Piyush Sharma, CEO of SANJOG. And the moderator, Pamli Deka, Head Energy Transition Finance, World Resources Institute, WRI India. May I request all the panelists to kindly please stand on the stage together for a group photograph. Thank you so much. I request Pamli to kindly take over from here.
Thank you, Manvi, and thanks to Clean and all the partners here in the room. This is an interesting panel because, in fact, the previous panel was also about financing. It's kind of a continuation, so I hope we can continue some of the conversations into this panel. But kind of a little bit of difference here, we'll look at the end user perspective. So essentially people at the bottom of the pyramid who are trying to access the financing for implementation of DRE-based solutions. And lucky to have a very esteemed set of panelists. It's my honor and privilege to be able to welcome everyone to the panel. We have actually two kind of, I would say there are two categories of experts here. One is people who actually bring in the views from the end user perspective. And then the other category is basically the financiers, both from the private side and the kind of philanthropy side. So maybe we'll start with Piyush. And I would also request the panelists to give a quick introduction about their organization so that everyone in the audience has some context. So we'll have one round of questions, which is basically to understand the challenges on the ground in terms of accessing end-user financing and, with real-life examples and cases. The second round will be around solutions, structures which work, and maybe finally some closing thoughts on, what are the few things that we want to take away from this panel, from this discussion today to kind of work on. So maybe Piyush, if it's okay, I will start with you. Trying to understand from your perspective of, having worked with the end users like the farmers, the FPOs, the SAGs, who are trying to actually implement DRE-based solutions. But what are the kind of challenges that they have been facing? Maybe 2 to 3 key challenges that they have been facing beyond what we generally hear in being able to access that finance for implementing DRE-based solutions.
Thank you. Thanks Clean for having me here. So generally I'm not at this side, I'm on the other side. So, and it's a great honor to share the stage with the panel that we have here. So I represent an organization called SANJOG, which is based out at Assam. And here, the challenge that we saw initially was that agency like Sanjog was at the last mile, and we had the community, and we didn't had any other ecosystem. So that was the initial challenge, and technology was also coming. But then one of the critical gap that we faced was access to finance. That too, I mean, when we say end user finance, the requirements were very small ticket size, as low as amount of 10,000 rupees, 15,000 rupees, which banks were not kind of readily ready to finance because of the high transaction cost. But thankfully, the first experience that we had was with the Northeast Small Finance Bank, which graduated as got the banking license from an MFI. But then again, since it graduated to a bank, they started kind of operating like a bank. And they had a very good loan product for promotion of, not kind of dedicated to a DRE per se, but then again, say a ticket size of 15,000, which we used for our ARE spinners. It's one of the silk that I mean, a lot of tribal women engage into. So we just mechanized the process because that process involved a lot of drudgery, and productions were not also optimum. So first 10, 15 loans were done, and then when we moved to the second phase, again, we introduced some end users. They waived off the loan product, and they said, Ki, we cannot give anything which is kind of, if it's not 50,000, less than 50,000, we are not entertaining. And then we were at a fix. So we started looking at, I mean, who can be the other players in the ecosystem who can kind help us. And I will not name the institution because the kind of agreement we went into, we had to give to secure those, say, initial 10 lakhs rupees of loan for our end users. The board members of SANJOG had to give their blank check, my personal blank check, and also, I mean, FLDG, that, I mean, 50,000. So for a not-for-profit, that's a huge, and I mean, I'll tell you, our turnovers are very low, around 70, 80 lakhs, average turnover in past 3 years. So that was a challenge again, but then somehow we could crack, and we could, I mean, we were working with Selco. If I'm taking more time, just prompt me. Yeah, so I'll just, so that was the initial kind of, we could, I mean, crack. But then again, that discomfort was there because it was not kind of customized the way. And then I came across with Naresh, who sits at Guwahati from Rangde. And we took the I think initial conversation with Swati, I guess. So I talked to her on phone, and then she connected with Naresh. So then we kind of thought, I mean, Rangde, I was hearing from a distance only. And we didn't know how the Rangde, so another partner of Rangde, Sesta, was doing some good work. And Pradyut, he kind of connected with Rangde. And we said, and we narrated the set of problems that we were facing. Best part was Rangde understood that. They understood how the financing should be done at a grassroots, and they helped us, I mean, customize the loan product according to the need of the end user. And that is how that, I'll call this beautiful relationship that started with Rangde. But yet then again, I mean, there were problems because Rangde, for its own operations, have to have a onboarding fees. So that too was initially kind of arranged by Rangde only through some grant, and which we could. But then again, the threat that we face, again, somehow we could manage that onboarding fees for this year also. But I mean, I don't know the years that going forward, but I think we are planning that because we need a partner like Rangde, and I think they have let us customize loan product, just not say one DRE product like which is ARE, which we have in bulk, but then other small enterprises. The most touching part is with persons with disabilities, the work that we have done, and they have successfully repaid. So my take is that if banks and other agencies come, I, I feel that, I mean, credit at the grassroots, the end users are not unworthy of credit, but they are very underserved. Yeah.
Thank you so much. And we'll build on that point. Actually, I wanted to ask you, what is your exposure to, if you talk about end users, how many 100,000 lakhs of people are you working with right now?
So it's not a very great number. So we are around 400 such end users we have in past 2 to 3 years of time. But then again, we think that when now the question of scale is coming, that is where also credit facilitation would be one thing which would be very critical when we scale up. And we think that these 300 and 400 numbers will not do. We want to at least see that few districts are, we give that district blanketing. So when we say scale, say Sanjog has a target of next 5 years around 15,000. I laugh at myself at sometimes, but then again we have that target. And when we scale, because you see the actual challenge starts uh, identifying the end user. Disbursal is okay, but then post disbursal the real challenge starts. So we have to think very critically, because we have to ensure those repayments. And gaon ka aadmi, they will not go, and they are not interested, and they don't bother on civil also. But then there are some now people are getting they are kind of more informed. I will not say fully that they don't care about civil, but then again, that's where I think the challenge will start when we scale up, because we have our foot on ground. I don't know how to remodel this based on our, because we are kind of doing this lending with individuals. Can we have kind of a group? So we are thinking of one concept called your. Yeah, please.
Yeah, no, thanks a lot. Actually, Ganesha, moving to you. Also from, can you share, I mean, I know you wear a lot of hats, but can you share your perspective, from the end user, in addition to what Piyush has said, what's the situation on the ground? What are those things like, I mean, we keep discussing about lack of trust amongst the financing institutions, right, for providing these kind of loans to the end of the pyramid kind of population. What are those, in addition to what Piyush has mentioned, any other things that you would like to highlight, which is, preventing financial institutions from entering this space, lending in this space, particularly from the end user perspective?
Yeah, thank you. Our experience basically says that the rural and tribal communities, mainly the small and marginal farmers, their livelihoods are fairly fragile. And looking at I would say the last maybe 1 or 2 decades, it has become much more fragile. The land fragmentations are becoming more prominent. And the families also do not have, I would say, very strong assets to strengthen their livelihood. For example, agriculture needs irrigation. Now, most of the families would not have irrigation as such to look at. So what we have seen as an experience is some of these aspects on the ground itself are fairly limited for the families actually to see that they have an opportunity to strengthen that livelihood. Now one needs to also see how an investment is happening on that particular piece to then say maybe bring a new technology to further enhance or strengthen that livelihood. Unfortunately, that capital itself has become very limited, or it has been mostly project-based capital. So you have a 1 year, 2 year, or a 3 year project, and you try and do something on the ground, which unfortunately also does not see how the community is able to own or absorb or manage those resources. So what we are seeing on the ground is the community actually has an aspiration to move in that particular livelihood from a long-term perspective. There is that visualization ki if I am able to get a certain support, I can move to that pathway. But the challenge is who's there actually to help them enable that aspiration to be met. And in my understanding, finance would come maybe a bit later. how are we initially trying to strengthen that, the point that you mentioned about trust within the community, how are we able to build that, how are we able to do some basic aspects on the livelihoods that we are trying to look at. And something that we have seen on the ground is, if the family or the community sees that they have done certain action on the ground and there is an income change, then the adoption and the demand is much, much faster. You just can't say that there is a technology and I would want to come and maybe deploy in your area. They would want to see a very clear-cut, say, outcome from that particular technology. So you initially need to invest in building that capacity or capability to see that happening. And then the adoption and the demand also is something that we see is increasing. Unfortunately, these gaps are something which I think most of us will need to see how we see it from an whole chain perspective, not only from one component perspective. And that's where I think organizations like SANJOG play a very important role, because they are on the ground to see it from an overall perspective. The other challenge that I am also seeing is, mainly from the financing institutions perspective, is though they have these so-called what they call focus areas to lend for these type of communities, they'll always be risk averse to say, "Okay, oh, these family would not be able to take a loan or maybe repay the loan," even after the family is part of a group which the larger NRLM structure has, and the family is showing a very good trend of actually repaying the group-based loan. These institutions will have an issue of saying, maybe she's taken only hardly 5,000, 10,000. She may not be able to take a larger loan and maybe repay that particular loan. And there are multiple, I would say, challenges that they start and bring in why the family would not be able to actually take up the loan. And they would expect multiple things which the families would not have. Like the land parcel to be in the name of the family is very, very limited as a chance to look at in that sense. And that's where I see a large problem within the financing institutions, that they have not been able to innovate to actually serve these type of communities. They are always trying to only maybe support some other level of communities. A last point, what we are also trying to see and experiment is, like even in a rural area, you are actually finding financing institutions coming and giving loans for bikes, which is again something which may be productive for the end user to take. But why don't we have something similar, wherein there are financing institutions like Bajaj Finance or Hero Honda Finance or whoever trying to come and give a loan for actually that family to purchase a bike? But why it cannot be something similar for, say, an agriculture-based livelihood or solar-based irrigation system? You don't see that. And I really do not know a reason why actually one is not able to innovate in a similar manner in that particular system when they are actually innovating financing into, say, something which is on a bike or something like that. So those are some challenges that we are also seeing from the community side on the ground.
Very interesting. I mean, even like in when you do good in board exams, people get gifts of bikes and scooties, right? Which I still did not understand. How does that help in generating income or kind of adding value? But yeah, actually now coming to let's hear from experts who have been in the lending space. Actually coming to Ram, I read that you have kind of given out almost 63,000 loans. Maybe that's an old number. 63,000 loans. Or actually more than that. That's the latest number online. So I think, yeah. But yeah, I mean, to kind of be very precise on that. So yeah, no, so that's where I'm coming. So out of those 63,000 loans, what do you think has been the interest from the DRE space for financing? And maybe you can talk a bit about your particular model of financing. I think it's very different from the existing models that we know. And in that context of peer-to-peer lending, what are the challenges that you see as a lender in kind of participating in this sector?
Just want to correct the numbers.
Please.
We were a non-profit for a very long time, and then we became a for-profit. So in the for-profit, we are 30,000 plus. Yeah. So I think just to add to what Ganesh and Piyush said, the problem we are looking at is fairly massive, right? So if you look at a country like India, only 12.8% of India's eligible population, which is 14 years and above, have access to formal credit. Right, so this is a bit dated, maybe a couple of years. But then please remember, in this 12.8%, it includes all regulated institutions in India. It includes microfinance institutions, it includes everyone. Now, when we talk about financial inclusion, now let's also look at definition of it, right? It's not about accessing credit. It's also accessing credit with agency. And I think that is what we need in the DRE sector. Yeah, what I mean by agency is the ability for the end user to be able to exercise choice. And the choice is in terms of how much they want to borrow, when they want to borrow, for how long they want to borrow, and on what terms they want to borrow. Right? So I feel, and most of the time we compare, interest rates. I mean, that's important. But if you don't have agency, the credit becomes a huge expense. It's no longer a, working capital. So, and I think that is something which is missing across the sector, right? Not just the DRE, sector. And that is something which obviously, we are seeing that is missing in action. And just to add to Ganesh's point, I think, what we are really seeing is we've actually seen zero innovation in underwriting norms, right? Because, a vehicle finance, for instance, two-wheeler, I mean, this has been there for ages, right? We've all seen it, right? I mean, it's an, two-wheeler, you get, because it's hypothecated and, so, but we've seen, maybe it has gone digital, right? The processing time has improved, but the underlying underwriting structure is still the same, right? It's a faster bullock cart, a digital bullock cart, but it's still a bullock cart, right? So that's a problem. I think, we'll have to figure out, there have a lot of been, attempts being made by the Reserve Bank of India, the Nachiket Committee on Financial Inclusion, spoke about small finance banks. But most of these, as somebody pointed out, that the moment they become a bank, whether it's a small or a large bank, they tend to behave in a certain way. So that's a problem, as a country we're facing. And just to give you a context, right, globally where we stand, India is 12.8%, UK is 55%, US is 66%, around, right? So in terms of access to credit, formal credit. So, so at Rangde, what we're doing is, honestly, it's an, it's an experiment. We need to really, take this to a level where it can become meaningful. What we're really doing is we are allowing an individual to lend to another individual. We've been doing this from 2008. By 2017, RBI came out with a new set of guidelines and a new regulation called the NBFC B2P. So we relaunched Rangde in 2019, so it's a little more than 6 years now. So this regulation itself actually is very revolutionary because it doesn't, allow you to lend from your books, right? As a platform, as a regulated entity, you're not allowed to lend from own funds. That's one part, which is massive, because then it gives you enormous flexibility. The other thing which it does is, even though an individual is lending to another individual, the Reserve Bank gives it a status of formal credit. Now, that's a game changer. Now, the regulation is what it is, right? So the way we have interpreted this at Rangde is to really create a community of individuals. We have about 11,000 plus who are made well aware that they're actually investing to include someone, right? So at any point in time, we don't tell them, hey, listen, we'll give you market returns. In fact, that's the most oftenly asked question, saying that, why doesn't Rangde give market returns? The regulation doesn't stop us from doing it. And our response to that is, well, if you want market returns, please invest in the markets. On Rangde, you get an opportunity to invest in communities for whom the markets have never worked. So when they, and then they see that, it's not just, credit they're, giving to someone, they're also giving a credit score to someone, right? So I think that is something which you've seen, and we're about 11,000, but we have plans to scale this to 1 million social investors, hopefully in a few years. But that's the that's what we do at Rangde, and because we are unique in this way we are regulated, we have enormous flexibility to design products based on the unique cash flows of the end user. So that capability, I think it's a bit unfair to compare Rangde with other financial institutions, because we have this, extraordinary advantage which RBI has given us in the form of this license. We can call it superpower, but we're trying to use the superpower as much as we can for the end user.
And in that context, particularly from DRE-based financing, are there specific challenges beyond the normal challenges with respect to lending to,
Yeah, I think, again, I'll just go back to what Piyush and Ganesh said. I think we really look for, when we underwrite, the lens which we apply is that of, how much social capital the end user has. So that's a lens which we apply first, and then we apply the other lenses like a traditional lender. But that is not, that's not, it's not a decision. The other lenses which you apply, doesn't determine whether they'll get it or not. But the non-negotiable lens which you apply is that of the social capital. So that can become at times a limiting factor, because for us to not work with someone as opposed to work with someone. So, but that's something which we will have to figure out way out. If you can, figure that out, then I think we can, cater to a much larger segment.
Very interesting. Just kind of inquisitive, given that the potential for this is huge, why are we not seeing many more such models? Any idea, like, this particular type of lending?
Yeah, to me, okay. I think, okay, see, regulated entities have, two things to deal with. One is their cost of capital and the return they promise to their shareholders. Again, we've been very blessed to have not even, we have zero commercial capital on our cap table. Now, it sounds too good to be true, but that's something which is something which we have at Rangde, and all our equity investors on our platform are also social investors on the platform, right? So I think that has given us the ability to do what we are doing. In fact, just to let you know, we have a record number of angel investors on our cap table. We have more than 250 angels on our cap table. So we are an unlisted public company. And you may wonder that how do you manage them, but we don't have to worry, because they're really, really aligned with our mission. So I feel the cap table and the cost of capital will allow you to do what we are doing.
Very, very interesting model. I'm pretty sure people in the audience will be interested to learn more about this model. Coming to Mr. John, actually, I think the whole genesis of how you all started, right, working with the marginalized society, and from that perspective, again, kind of building on the real life stories that we have heard, what are the challenges that you see when it comes to lending to the end users? It could be things like absence of credit history, or as Manmay said, lack of ownership. What are the 2-3 things that you would like to highlight as a financier? And maybe you can also explain a bit more about ESEF for the audience here.
So thank you, Pamil. So thanks WRA and Clean for this opportunity given to ISAF. So I represent an organization called ISAF, ISAF Social Enterprise, a group of social enterprises. So we are based out of Thrissur, Kerala. And so we have 34 entities within our group, and the major entities are ISAF Foundation, and we have a ISAF cooperative. In the latest 2017, Reserve Bank has given a license, scheduled license to our microfinance to become a small finance bank. Now we have a scheduled bank also within our group, that is our small finance bank. We have presence in almost 27 countries across India, with a direct customer base of 1 million. And ISAF also started as a small NGO in the year of 1992. And in 2006, we become a NBFC. And 2017, we become a what called a small finance bank. So we know we from the initial days onwards, was an NGO time onward, we are very keen and we are working in the triple bottom line approach. That is, planet is one of our major approach. And at that time, when we were an NGO, then we were focusing to make the awareness and other thing. So when we become a NBFC, we were started lending on this micro that energy product like solar lanterns and other things. So we could distribute reach almost 5 lakh families in India. Then 2017, when we became a bank, so the day one onward, we are also introduced a product which is called a Surya Jyoti clean energy product. So which is still in existence. As Piyush was telling about the challenges of becoming a bank from a microfinance, that is very true. So once we become a bank regulated under the Reserve Bank of India, so we have to follow the guidelines which is regulated by the Reserve Bank of India, so that we know the challenges that other agencies. When we were a NBFC, we have the enough freedom to make the product as per customize the product also. Now we are into this this product. So we have a ISAF Surya Jyoti clean energy product, which is starting from 1 lakh to 2 crores, and this also can be financed to DRE products also. From our experience for the past few years, so DRE product funding is not happening very much. So other normal, the rooftop and solar to be every month we are doing a business nearly 3 to 4 crores of a business, but DRE products are not coming much. So that the challenges that as a banker, so we are also facing. The DRE, this thing is, one of the belief that is happening in the market and other thing, this DRE products, I don't know whether I am correct or wrong. It's a sort of subsidy-based or grant-based model. So that is a thing. So whatever DRE products, if solar pump or solar cold storage, whatever is happening, that is becoming a subsidy base, 80%, 90% subsidy. And see, some of the areas, and see, the people are getting the products. So for the sake of getting, if the FPOs or farmer group, they are getting the product without the need. So the systems are idle. So most of the places it is idle. So we are highly giving the subsidy without the need of the community. That is one of the things. The community doesn't have any business plan or anything. So they are just getting availing the subsidy or some pressure from their promoting agency for the sake of. So only the annual report is showing that we availed one cold storage. So that is, after that there is no such of business of what is return, how to use, no business plan or utilization. That is one of the things. That is also becoming the bankers also. See, they are also seeing the same trend everywhere. Most of the DRE systems they are procured is out of use. That is one of the thing. Second thing, the bankers. So mainly think this they are dealing with the farmers or FPC or individuals. So bankers, what they need is that they need two things. The major thing is they need the repayment. That is one of the things. So because this is a public money, we are also answerable to the depositors. That is what their major intention is, to get the repayment. So they are also in the social, and because ISAF like people, we are coming from a background of social background from the NGOs. For ISAF is started as a ISAF foundation only. Most of the corporate, once they become corporate, they will form the foundation. But ISAF is formed from the foundation. That's what our founder and all the people, they are very particular about the social business. So that's what, see, for us also, once become the bank, so our also priority is to repay the money. See, there are two things we need to make it viable. So one is this system should do a sustainable business. So year to year, see, if a cold storage or solar water pump, it should generate the revenue out of that, so that the community or whoever it may be able to repay the things. That is not seeing everywhere. So once the system is installed, after 3 or 4 months, we are starting the business plan. By that time, the system will be half of gone.
The second is the thing is that so once the systems is installed, the maintenance is very much required. So that is once the system is gone out of order, the community also, because see, I'm not blaming about the community or anybody. So once the system is gone, then the entire, that see, there won't be any people, because the installer will be from 300, 400 kilometer from the rural. Then after that, nobody will be coming there. So that is one of the system that we need to develop a local level mechanism to what it called the operation and maintenance. The thing is that, see, one other thing, I'm not taking much time, it's okay. The one of the things that we are talking about the farmers. So the farmers are producing everything they are doing. So we should not think that farmers do this business and other all the things together. So they let them produce. We can also find out the people, entrepreneurs from the field level, so that they will be able to run this system, so that they can also, so the rural level entrepreneurs, we can make it. So they will be, that is, see, now everything we are leaving into farmers. So they have to produce, they have to do the business, they have to generate the revenue, they have to repay. So let them, so everywhere we are also seeing, the once upon a time, we are telling that it's an agriculture. So it's a culture. So now it is a time has come, it should become agri-business without changing the culture. So farmers also, we also should empower the farmers to become from the agriculture to agri-business people, to become a what you call the agri-business people. So we financiers can finance the thing. So we have a collective approach with the civil service organization also. So as a collective system, see, let them empower them to be the business people, to be the what called the running the operation. So these are a major points. For a financier, the thing is that, so they are not seeing much business revenue generation in the paper. It is there. When it is coming to the actual, I'm talking about the practical thing. Everywhere it is there. Even we have the loan which can be up to 1.5 crore. So this is also included in the DRE system. But much applications are coming if our people are also going. So these are the questions arising. So they don't. The people who are using doesn't have much idea about the repayment modes. That is one of the thing. And also the thing about once the system is installed, what is the mechanism of the operation and maintenance. These are a major things. If the system is, civil service organizations and financial organizations, they should work together to make the system as a viable model, which is making the revenue out of that. Definitely, I think the DRE system can be financed like all other. See, because our rural community, they are taking all other loans. So they have the idea to repay. So we should have more collaborative approach between the civil service organization and the financial organization. I'm sure that the availability of finance for DRE system within the rural community will increase.
Thanks a lot. I think you've already started talking about the solutions, but before that, last but not the least, Mahenaw would like to kind of understand a bit from you. So we've talked about commercial capital, impact-focused capital. Would like to understand a bit from you in terms of the philanthropic world, right? What are the challenges the philanthropic world is facing with respect to looking at this sector as an area of investment? I mean, is it like Mr. John said, is it the lack of evidence out there in terms of repayment capacities or income generating capacities? Where does philanthropy basically sit in that stack of financing, and what are the issues that philanthropic capital faces to kind of be more active in this space is something that we'd like to understand from you.
Thank you. Let's start from the stack of capital. So what is the stack? I mean, for us, we look at the stack as if philanthropy comes in, then it's grant money, and then at some point the stage has to be such, then there is blended capital at least to some extent, to unlock commercial capital, right? In that way, by definition, our role kind of starts with the grants and kind of ends there, unless there's a blended finance opportunity there. And I mean, our organization does not provide such kind of blended finance. So it's quite limited in terms of that way. So what we do, first of all, we don't directly work with end users. It's our partners who work with all the end users. And I would say the kind of works that our partners do is everything that you said. I mean, and the beauty of speaking at the last is like everything that has been said in this panel. These are the work areas I see our partners are working. First of all, I mean, evidence. And what we mean by evidence or proof of concept. First of all, we talk about data, but what kind of data? Data is there, but whether that data is visible in a way so that the commercial lenders are interested in providing support in that, that tells us that being viable is different from being visible, right? Because a DRE model may be viable, and the people who are getting impacted by it, if they install that system, it looks profitable. I mean, sometimes you can also show it is profitable. But how do you then bind the commercial capital providers or the financiers or the banks and make them understand in a way that they understand? Because the end users, and again, let me acknowledge that in our part of the world, in the development world, we like a lot of jargons, and end user is one of that. My question to this panel also is, is it a homogeneous term? Can we use end users as a blanket term, right? So anyways, I mean, let's use that term unless we have an answer. A lot of the agricultural models, or a lot of the products these end users produce have a seasonality to it, or an income variability. So the commercial lender needs to understand, that kind of variability and seasonality. Are we doing that? Are we doing enough for that? And I wrote something which is, I feel like, and also I'm acknowledging the different partners I see in this room, and with that opportunity, I want to highlight two things. One is, I'm not aware of if there is any standardized impact metrics within the sector. Again, the second thing that I'm not aware of is if there is any homogeneous reporting frameworks for all DRE models. If there have been, maybe the understandability will be there, and our partners would not have to build the capacity endlessly to all the financiers, because that is another aspect of the work that a lot of our partners do. Go to all these banks, financiers, work with them first to establish that understandability of seasonality, income variability, etc., and then build their capacity so that that commercial capital gets unlocked, right? And the other aspect is that we support where markets don't work, or market hasn't worked yet. And how do we do that? I mean, we cover the first risk or the first cost, or we try to de-risk the barriers. And sometimes this risk is often perceived. For example, any DRE product, it is perceived as risky by the end user, right? There is also, because there's no direct connection of income increase or cost reduction, and how is it impacted in the ROI. For an end user, these are difficult terms to understand. So I think the partners who work in terms of data, in terms of capacity building, particularly the think tank partners, I think these are the areas where they work in terms of providing solutions, so that even if the it's a matchmaking in both ways. One is with the financing side, and the other end is with the end user side, for more awareness of the risk factor attached to it, how installation of a system doesn't directly show up as income increase, and how that kind of cost reduction is not linearly related to ROI, etc. I would pause here. Thanks.
It's an important point you bring up because we have been talking about livelihoods, but this session is not just livelihoods, it's about DRE overall. So DRE can be used for education, for health, for disaster management. And there is no direct kind of return on investment in terms of capital investment. There are other returns that we need to address. So actually, Mahenaw, I was thinking that would it be possible to kind of, for your partners in the audience who actually have been at the bottom of the pyramid, who have gained from philanthropic funding, to be able to share with the audience? I know we are kind of not following the standard approach of a panel, but I was wondering if someone from the audience would like to share a few words. Yeah, I think we have two people. Not a question, but in terms of, how do you think philanthropic funding has been helping?
Yes,
That's
with
something
an
that,
specific example.
yeah.
And after these two gentlemen,
Yes, please.
can I also call out names after their intervention?
Yeah.
Now?
We can
Okay,
spend
yeah,
like
then-
5 minutes hearing from the audience.
I mean, two people already raised hands. Anyways, so after them, probably it's can Ektadi and Panchali.
Maybe we can start. Do you have a question, sir? Or
I have a question on.
so question we'll take later on. We are
No.
trying to understand how people have received philanthropic funding and has helped them in moving ahead in terms of being able to catalyze other sources of funding.
All
the
right, I
background?
can also talk about that, but anyway.
Okay, no, please go ahead. Please go ahead.
All right,
The
but
question we can keep for later.
no, I'll give the others a chance because
Okay,
she's
sure,
called out
sure,
their names. I'll take the question.
Thank you. Hi, I'm Srijit, and I'm from Wilgrow Innovations Foundation. I'm part of the Powering Livelihoods program that we run along with CEW. So the insight that I have wanted to bring is that as a part of Powering Livelihoods program, how we have been approaching this is most of the DRE solutions, and as Mr. John said, there's a popular myth that DRE solutions all require subsidy. Unfortunately, there are a few products which has a payback period which is more than probably 2 years or 3 years, which gets a lot of attention because they require subsidy to be deployed. So that's why when we say DRE, generally the discussion goes to cold storages, pumps, etc. But then even in under Powering Livelihoods, we are incubating at least 10 to 11 products which are selling without subsidy, absolutely zero subsidy. But how it is being sold is through partners like SANJOG. So on ground, basically the channel partners, they set up the sales agent network who takes the solution to the market. And these channel partners often develop themselves as business correspondents for the banks. They do soft collection. They provide information that is required by the banks. And thankful to organizations like Rangde, FWWB, ARM, Samanati, etc., they've been going over and beyond to customize their own norms to accommodate customers who otherwise would have been perceived as a high-risk customer in a bank. But still, there is a lot to be done. But then, through this approach, where channel partners becomes the sales agent network, since they are doing sales, they also are incentivized to sell everything which is around it. So they are doubling up themselves as business correspondents and finding customers who actually need it. And they are training their staff and the sales agents on sharpening the sales pitch, which, as Mahenaw mentioned, to simplify the communication in terms of how the payback period is, how the ROI is, how the cash flow should be. And we, organizations like us are completely open to give more information to financiers if it will open up financiers to take more risk. Like, the cash flow of each of the product, customized information on the cash flow. If they have taken loans previously and the credit score is low, our channel partners would be ready to basically get the information on whether there are genuine reasons behind it or if it is financial indiscipline behind it. So not just looking at it from the CIBIL score, if it can be accommodated when somebody wants to buy a product which gives income returns, if it can be looked up in a separate manner. So for that, whatever background work need to be done, we are also, organizations like us are also ready to put in work behind it. And yeah, thanks to capital, the funds that is brought in by organizations like IKEA Foundation, Good Energies, Dune, etc., that we are also able to work on it. So through this approach, we've been able to reach out to a lot of grassroots, take a lot of grassroots innovations to ground to people who actually need it, and not being pushed only because there is a subsidy behind it, or there is a scheme behind it. So I just wanted to put it across that this is happening. Probably we are also not too vocal about it, that it's coming to the fore, but I think that's the way forward, and yes, that's where DRE is moving to.
Yeah. No, thanks a lot. I think this is the platform to kind of make sure that people are aware.
Ekta from Switch On
Yeah.
Foundation, please. And then Panchali from Dharma Life Foundation.
Hello everyone, I'm Ekta Jaju from Switch On Foundation. So I think the example that I'd like to perhaps highlight is the earlier days when we had just started promoting solar irrigation, and we saw the immense opportunity to drive it as a business model, financial model, because there was a huge opportunity to replace diesel with solar. And through our work in Eastern India, we realized that farmers were able to pay for it, but they were just not able to pay for it at once. And I think a lot of us now understand how the financing works for it. But at that time, when we approached banks, there was a huge resistance. Of course, we all understand that they look at farmers as high risk. And what Good Energy's funding actually supported us to do was set up FLDGs with banks, which de-risked their loans, and then also help them identify the right farmers. People mentioned through credit scores, etc., to help identify right farmers who were already selling water as a service in their community using diesel pumps, supported them to convert to solar, and then also ensured that they were paying back these loans to the banks, so that that grant funding actually enabled us to unlock a much larger amount of funding with the banks. And so some of these innovative ways in which how grant funding or philanthropic money can help unlock much larger funding opportunities do exist even now, especially when we're looking at other types of technologies and opportunities for the community. Thank you.
Else who wants to share?
I would want to talk
Please.
about one example.
Yeah, please go ahead.
Thank you. I'm Upasna from Resham Sutra, and last year we won this Swavlamban Challenge Fund by SIDBI, and we got a good amount, and through that fund we were to train 1,000 rural women to adopt technology in the Northeast, and we zeroed down to Assam, Meghalaya and Nagaland. And with that philanthropic fund, we were actually able to reach out to 1,800 rural women. And Saurabh sir, sitting next to you, is one of our most proactive partners. And that just didn't do capacity building, adoption, but we could also do credit linkage. So, it was a very well structured project which we carried out. And that project also had catalytic effect. So, of course, we got credit linkage. So, we have those project outcomes. Now, once that has been piloted, and it kind of then evidence was proven. And I think I said it yesterday also, that in Meghalaya, that same project was taken up by the District Rural Development Authority. And we got CSR fund from Indian Oil. So one fund leading to another. So I just wanted to say, if we have dedicated team, it attracts more funds. Thank you.
Thanks a lot. Actually, we are already moving in the direction of innovation. So if it's okay, maybe I'll quickly move into the solutions thing. And great to hear there are so many experts in the room. I think this is also kind of good notes for clean, because we already know, where the experts are. I mean, we already know, but in terms of what the direction of work is here. So maybe coming back to the last round of questions, Piyush would like to understand from you that what would you like to see? You talked about the challenges, right? What are the one or two things that you would like to see happen so that some of these challenges can be taken care of, particularly from the conventional financing institutions perspective, because those are the most easily available sources of funding even at this point of time.
Yeah, so I think we are Sanjog, at Sanjog we are a great risk taker. So even kind of forging our first kind of agreement, and then we have tried one thing that would like to bring to the knowledge of. So we have tried to incubate and for-profit entity, which kind of Resham Sutra and Will Grow has come together. And the basic idea is that, I mean, when we see the entire this granting for DRE, so grant has its own limitation. So one thing that we are trying is that I mean, incubate such agencies. Once we establish the ecosystem, they take it over and give it in the community. Like, we don't seriously believe that anything should go as a free dole in the community. But then again, the ownership, the community should become the owners of these assets. So that is one we have tried, and but then again, always there is a pain of raising and incubating and that agency. So Green Hub Agro Community is one agency that we have. It's still in its teething stage. 1 or 2 teeths have come out, but then I am sure all the 32 will come in some portion. But then again, that doesn't mean that we stop trying once we kind of exiting. So we see that challenges for, I mean, I've been talking, been very vocal since the day one on kind of grants to the, because not a lot of the Indian philanthropies are there. Somehow we need to come to their agenda. So that is one. So we want to kind of, since we exist there, we want to take this risk. If we don't take this risk, we will sell tea. so so I think these things we can try. I mean, but then we need that entire ecosystem, and I think Clean is one that platform which can echo our voices. Thanks.
Ganesh, coming to you in terms of like to hear a bit more about the strategies that you all have implemented at Sustain Plus in trying to scale up the adoptions of some of these solutions at the community level. So while we completely acknowledge the fact that there are issues even before financing, but once we cross that bridge and we are able to raise financing for pilots, how do you go beyond that pilot to scale up? Any successful strategies that you would like to share with the audience that the audience can learn from?
Yeah. So Sustain Plus in a way was promoted only to see it from a scale perspective, and we were basically saying with the partners sitting here who have done a lot of pilots, there is a good experience on the pilots. How do we come and maybe take it to a next level of either a replication or a scale to look at? And what we basically are seeing is, even if one is looking at the different value chains, and again, our focus is mainly in livelihoods in that sense. But in the different value chains, we are trying to see how renewable energy can come as an enabler and is able to strengthen that value chain in a systematic manner. And while we are trying to do that, we are also trying to see is when we as a team are talking about scale, is we are saying it's like a program induced scale, which is having some philanthropy support or a grant support that is coming. The end user is contributing very, very importantly. And third, there is some financing that we are able to leverage, so these are three, I would say, financing capitals that we are able to try and bring in from a program-induced scale. The next level of scale that we are seeing is maybe a market-driven scale. And I really do not know whether it would be a 100% market-driven scale, because somehow I don't see that happening, at least in the nearer future. So for that market-driven scale also to happen, what could be a percentage of, say, philanthropic or risk capital that is needed to also push that market would be critical. I don't know whether it is 5%, 10%, but it would be needed is what I strongly feel. And the next level of scale is also to look at a government induced scale. So I think we spoke about subsidy. Somehow I feel subsidies would be really required if DRE has to come in. Now it always will be a debate wherein the subsidy has to be this percent or that percent. But in a place like Jharkhand, which is fairly remote, the farmers would need, say, a 70 to 80% subsidy. You would not be able, otherwise it would have to be grant. It would not be a market for sure. or a financing which would come in. So all of us will need to be aware of that piece as well, that how do we also see that subsidy coming in, but how do we maybe play, and I think Clean will have that critical role to also see how that subsidy is in a way designed, which is helping the community more, and Clean, because of its strength, can and play that role to look at. So I feel ki these are opportunities for us to scale, and in our experiences, we are trying to see how we take that particular step with powering livelihoods, the example that came, something similar as an approach we are trying to build up, but to see if it can be scaled. And we are trying to see one example here is our partnership with the National Dairy Development Board, because that's a very critical start partnership for us because of their strength with the larger dairy cooperative ecosystem. And then as Sustain Plus, how do we strengthen that whole dairy value chain with the partnership that we have with NDDB? Now it helps us to see a scale with the NDDB ecosystem, but also use NDDB to influence the government to maybe look at some other aspects to be brought in. So those are approaches that we are trying as a team also on the ground.
Very helpful. I think we have to take those inputs from the perspective of also not just livelihood, as you said, but overall ecosystem development at the rural level. And then now the way the the country is moving towards urban development areas, like even at the peri-urban level, there's a lot of need for intervention. So I think that kind of how the income levels are changing, and according to that also customization will also keep on, we'll have to see innovation. Coming to Ram, actually, same question for you, in fact, that, how have you been able to deal with this issue of risk, risk associated with lending? What are the success? Because this is an inherent problem that the risks are very high, perceived risks or actual risk, right? It's still in the mind of people. So as a P2P lending model, how are you able to deal with the risks associated with this kind of lending, particularly in the DRE space? If you have seen some successful stories or examples, would love to hear from you.
Yeah, I think, well, as a regulated entity, we need to have a underwriting model. The model which we have chosen for ourselves is, it's based on a scorecard, right? So, and we have built customized scorecards to enable that, and we do underwriting at 3 levels. One, we do it at the partner level, because our model is entirely driven by our partners. It could be a civil society organization, it could even be a government program. So the partners definition is quite broad. So we have a scorecard for that. Then we have another scorecard for the program, which the end user is part of. And I think that's where the social capital comes in, how much investment is going in terms of supporting, giving the market access, and and other things. So that's the second part. And the third part is really the end user herself. So where we do a credit score check to see if they have a past borrowing, and we get a report. So yeah, so all these three put together is how we arrive at the credits under our own risk rating, right? So which is a kind of a composite. We don't publish this today, but very soon we'll actually publish this as well. And then behind the scenes, we use a platform called Synaptic, which is AI powered. So the numbers are small right now, but over a period of time, we'll start seeing trends, we'll start seeing insights as to, for a DRE in a certain geography, how was the response? Today, the numbers are way too small. And in terms of success stories, we worked largely in solar irrigation pumps, and we've seen some phenomenal success stories thanks to our partners again, AKRSP, Sustain Plus, where we have seen them become very successful entrepreneurs. I think it's one thing to be an end user, but I think we've also seen some phenomenal success stories of entrepreneurship arising from DRE. I think that's another focus area I would strongly recommend, that as a sector, we also, position DRE as a way of becoming, job creators, right? So that's, in our experience, we've seen that, play out really, really well. Again, the credit goes to our partners and, and support from, Sustain Plus and partners on the ground.
Very interesting. I guess these success stories are not really out there, and that's why there's a lot of inhibition still. And I think that's something to think about how organizations like Clean or WRA India can actually work on, putting these success stories out there, which can bring that confidence level not amongst just the financiers, but also amongst the end users who are trying to, adopt some of these solutions. Coming to Mr. John, actually, a very similar question, right? You have to kind of obviously give credit, but at the same time you have to manage the risk. And particularly with your type of the kind of clientele that you have, how do you manage it successfully?
I am part of ISA Foundation. I'm not a person to say more about this. That's the bank is managing the thing. Very similar to where Mr. Ram he was also telling the same similar way we are managing the credit thing. So the solution side, DRE, we don't have much products in existence. The other thing that the bank has its own protocols to write off and other thing. So as far as this clean energy loans, rooftop and other things are telling, we have a very limited that NPS are there. So because that is mainly goes to the door, there's that they are seeing the major what you call the benefit out of that. So why how our loan products are for this rooftop products are made in a way that their monthly electricity bills have been the same bill will be coming. So anyway they are giving the electricity instead of that giving to electricity board, the same amount has been given to the as a loan repayments. That way our the traditional that rooftop loans that NPA rates are very high and it is going very well. Month by month the business is also increasing. So that is one of the things. So once we enter into this DRE, then we have to see, because we have to see the all factors also, social, that community, all factors. So that is one of the things that I wanted to.
No, definitely. I think that's something for a follow-up conversation at some point of time.
Yeah.
Yeah. And coming back to Mahenaw, if you have any final thoughts, and we've already heard from the audience in terms of, success stories and how do you kind of actually bring it out there so that you can further catalyze other sources of funding. Any suggestions that you have?
I'll start with something I wanted to say as a lay person. I'm not a technical person, which is, I think, as long as DRE being perceived as a climate action, it will, the struggle will remain. If we look at DRE as a livelihoods infrastructure, then we can make it more investable. And then how do we attract that investment? Because the risk will always be there. And if we really want the finance to actually flow to the end users or to the last mile, it's not just capital barriers. To me, it's also transforming of the risk. I mean, the sharing of the risk at various levels also needs to happen. Having said that, as a private philanthropy organization, we will always be, our only vehicle to do this is grants. And through grants, we would always like to remain, and we will remain as the catalytic funders, the first risk coverers, right? And then, the vehicles are like proof of concepts. I think everybody knows. The two deliberate approach that I can talk about, I think Ganesh already mentioned that. One is that kind of a collaborative approach, going into one place, look at the stakeholders, look at all the ecosystem builders, and then provide support in a way that the whole ecosystem gets benefited, and DRE being perceived, or DRE being treated as the enabler. Basically, it's also a lot of partnerships that needs to take place. Nobody needs to change any of their models. Rather, look at the value chain, existing value chains, and see how DRE can plug in and bring in efficiency, bring in profitability, etc. So that's one approach. So at this moment, our organization is definitely vouching for lots and lots of grassroots partnerships to take place, a lot of collaborative efforts, not only among the partners who are present in this room probably, but also like going back to the places where we actually work for the communities, partnerships at that level as well. One thing that keeps coming back, I think it's worth mentioning, is the O&M part of it, right? that provides a lot of confidence, not just to the end users, but also to the financiers to provide further financing. Some of the examples, I think a lot of these participants in this room already know, we do have some good cases in the healthcare system in India, how DRE could play a role and how that is scaled up. And I see some of my Selco colleagues sitting here, so definitely want to mention their work. I also want to mention, I mean, Panchali wanted to speak, but with the interest of time, I can speak about the examples that I've seen in that model. Dharma Life Foundation does have an entrepreneurship model, and what started in 12 years ago with some going into some villages and training these women as entrepreneurs, DRE entrepreneurs. Some of them have become that role model that the villages, the blocks look up to. Sometimes I look up to them. The way they have built themselves has become business leaders in their communities. Now it's not only limited to from entrepreneurship to an SHG model. Now they're going into register themselves as like commercial entities, private entities, getting bigger. So these are the success cases I talk about, and I would like to end again with two approaches that we should talk. I mean, we should emphasize, and Clean should emphasize. All the partners who are present here should emphasize that partnership model, grassroots partnerships, collaborative model, and the other thing is the kind of strategizing our communications within the sector, so that we speak in a language that is understandable to each other. That cannot be just a language barrier. It's about like how to speak in a way that the other person understands. Thank you.
I think that's very rightly kind of summarizing the thing as well. I completely agree with you. And again, I mean, can't kind of summarize this interesting discussion, but just a few things that I would like to mention. I guess we're also running out of time. I see Ranmay on the stage. So I think innovation has been the way to go. And I see success stories also coming from people who are passionate about driving change. And this sector still requires a lot of passionate people. It cannot be like any other person, any other entrepreneur trying to do DRE. I think this thing came up today somewhere as well, that not any other entrepreneur can come and start to look at DRE as a space of activity. It requires specific dedication and passion. And along with that comes the need for customization. We have already seen some examples of how customization has been achieved from the audience and from the panelists. The value chain approach, again, is very important. Financing itself doesn't exist in silos. There are multiple other things before financing, to the extent of even trying to understand if this is the particular solution that is required in the community. We cannot go into a village and say that you should replace, for example, a handloom mill with a kind of a electricity-based thing. So I guess that understanding that sensitivity is very much required, and that is something that the DRE solution providers should also be cognizant about, that not every solution fits every kind of aspect. Yeah, and I think that whole mindset of trying to develop entrepreneurs, businessmen, who can kind of look at it also from the perspective of income generation where it is relevant, but also with the kind of social impact angle, keeping that in mind is very important. So I guess there's a lot of ask already from the end user. Sometimes I feel that we are putting a lot of burden on the end user, on the farmer, as I think it was already discussed, that farmers, they have a main job, which is farming, and then to expect out of them to go for this technology, that technology. I think there's a lot of work that comes back to us as experts in the space on how we can make their lives easier, to help them adopt some of the solutions where relevant, and kind of map the right set of financing to the right set of people. I think that gap still remains. And that's something maybe where Clean, WRI, and other organizations, CW, can work together to see how to bridge this gap. So those were kind of my thoughts from this session. I don't know if we have time for questions. 2 minutes? 2 questions. Okay. Yeah, yes, please.
Yeah, so like I am Dheeraj from WRA India. So I have a very basic question from maybe Ganesh or others. So NRLM or SRLM has really the biggest program of the credit linkages. So is there any perspective, your observation, or maybe any research where DRE or the asset is really going to be in their hands with this money? And also just following on this question, how we can tackle this PSU or the scheduled banks where credit worthiness is not an issue or from the end user, but how we are convincing these banks to make DRE really bankable.
So on the second one, very difficult. Uh, all of us keep on trying, and I think some of us succeed in a maybe in a smaller case, but it is all maybe individual dependent. The way we have in the government system also, it's very individual dependent. So second one, I would not have a very clear cut answer such to put across. On the first one, I think with the NRLM, SRLM, it's a very strong institutional base that we have in a country, and at least in some states, it's really very, very good to look at. And the CLF based investment which comes to the groups and others, the concern or challenge that I see there is the amount that the CLF is able to get, or the amount the CLF is able to give it to the member. It is still on a smaller what you call ticket size. Like for example, with Jivika and Ram was sharing about that, when we were saying ki in Muzaffarpur with AKRSP there is a need for about say 5 lakh rupees, they were saying no, that group itself can only get about 2 or 2.5 lakh rupees. Now that is a challenge vis-a-vis the way they also structure the whole, say, financing coming from the CLF to the group. We are basically trying to convince them that there is an opportunity. Please increase the money here. Maybe in some other livelihoods you can decrease it. But how do you see that balancing happening? Or maybe we bring in some resource to match that and then see that the community is in a way using that particular technology. So that effort in certain states is really trying to build up, and in certain states it still remains a challenge to look at. On PSU, unfortunately, a big challenge.
Yeah, if I can just add to that, the CLF if you know how it works, right? Just to add to Ganesh, you have a CLF, you have a VO, and then you have a SHG, and then you have a end user. Now the problem is that the end user, by the time the end user is able to communicate, even assuming that CLF has got a lot of funds, by the time the end user communicates to the SHG communicates to the VO communicates to the CLF, we're talking about roughly 2 months. And then they send a check to the VO. So it's quite an inefficient system. Now, that's precisely why we have seen a lot of microfinance in India. Right now, it's a very sad statistic, but Bihar happens to be the poorest state in India. It also happens to have the largest number of microfinance institutions in India. Right? So something is clearly not working there. Right? So therefore, that's not as much as I want it to be, it's not a good option for DRE at the moment.
Yeah. So I also can. So Sanjog has a non-financial MOU done with Assam State Rural Livelihood Mission. So, but it took us 2 years to crack one CLF loan, which was for a honey processing unit, which was lying idle. And it's a real challenge, the way he said. And banks, so I don't know, since we have nothing to lose, we thought wherever we get them and we tell them upfront, this is the model that we have created, come and see. They have high amount of NPS with JLGs, joint liability groups, and we have shown them the successful model, but they are still keen to do mudra loans, but not to kind of come in such. Yeah. Thank you.
Hi, I'll take this opportunity. It was great to hear all the successful stories. Without being too cynical, I'll try to share some not so successful stories of my journey. My name is Prashant Venkatramana. I ran a company called S-Mart, which used to do distribution for DRE products and financing. I recently joined Urja, which is a pay-per-use solar irrigation company that someone else was talking about. While we moved from informal financing to formal financing at S-Mart, working with small retailers, FPOs, and directly with farmers, I got a little disillusioned, especially with formal financing, to be completely honest. At the same time, we were trying to sell new products. We were also trying to push a financial product that they have never taken before. Many of them had bank accounts, and immediately we wanted to take loans. They have not done any kind of saving. They have not done any RD, FD, no mutual fund, nowhere, any of that. And for us to go and push a loan along with a product that was not tried and tested was personally a little bit of a challenge for me. At the same time, I want to put out a question. Why is everybody looking at loans for farmers to adopt technologies that nobody else has tried as early adopters? Why are people not encouraging savings behavior to adopt this product? There will be a lot more agency. There's a second part, because you wanted to know about philanthropies. SMART was funded by philanthropies. Urja was funded by philanthropies. I've seen that a lot of focus has gone back to the NGO sector to drive adoption. A lot of for-profit social enterprises have lost out in this grant race, all of this. I just want to say it out here that people who started for-profit enterprises in the social sector didn't do it to compete with Elon Musk or Mark Zuckerberg. We used the model because that was the only way to reach these markets effectively. There are definitely CSOs that are effective at distributing these products, but to be able to be an effective sales organization, a for-profit model is very helpful. So I'd like to also request if philanthropies can continue funding models, not necessarily alone in asset financing, but also especially in rental models and pay-per-use models that are a lot more de-risking for the farmer to be able to adopt DRE.
Thanks a lot. And I think these are real insights from the ground. And I don't know if there's a direct answer to this question because it's a very detailed one. Happy to kind of connect with after the panel.
Hi. Can I ask a question here?
I think we're running, I don't know, do we have time or one last question?
Okay,
Yeah.
great. Thank you. I'm Deepak Gupta from Urban Climate Finance. My question has actually two parts, one for Ganesh and one for Mr. Ram. So Ganesh, you mentioned about farmers getting, bike loans easily and not for, solar pumps. Do you think, and have you faced that in your experience, that the repossession capability, I mean, a bike can be repossessed and resold, but a solar pump really can't be. Is that a hurdle? Because, financiers like ESAF would be looking at that as a matrix as well. And my question to Ram is, you mentioned about superpower to enable a credit score, not just credit for a underserved community. So is this actually bearing result? Because if how is the delinquency in your experience, for example? Is it better than the microfinance institutions? Because if it is not, then by giving a bad credit score, you are preventing the chances of a new to credit customer, which would have otherwise been, neutral. So is the credit score, because of the matching with the cash flows of the farmer and customizing because of this superpower in the peer-to-peer lending, is it really working at the grassroots level? These are the two questions.
Yeah, I would request the panelists to try to address both the questions. I mean, we couldn't address it in case there is, yeah.
Yeah. So on the first one, again, we are trying to use some of these so-called models that say maybe a bike financing is using to maybe take the vehicle back. And what we are also experimenting is on the solar-based irrigation systems, wherein we also try and maybe use an opportunity or a technology to keep it mobile. Like, for example, the work that we do with KhetWorks, which is a sub-HP pump, you have an opportunity actually to take it from the end user. And that gives us an opportunity to maybe give it to a new end user with some, say, refurbishing to be done. So we are also trying to see if we can use some such opportunities in that particular space. I think the point that you mentioned, some level of disagreement to that, please don't see the NGOs or the civil societies as people who are trying to be interface of selling the products. Roles of the non-profits is broadly very clear, is to see how we can institutionalize and then engage with relevant stakeholders to look at in this space. Like you mentioned about Urja wherein it is working in UP, it worked with Aga Khan Foundation, wherein Aga Khan Foundation was able to give them an opportunity to use a service model to be brought from Urja's perspective. Now, an opportunity for a social enterprise and a non-profit to work together will really help a lot from a growth perspective.
That was my point exactly, sir, that we want to work with more
Yes,
non-profits, not look at us as people who are trying to become Elon Musk.
Yes, completely.
So we want to work more with non-profits, and that kind of capital will be catalytic in mainstreaming these technologies.
Yes.
Sorry,
And I
if
think
it
a
sounded
lot of
wrong.
non-profits also try and see how the capital that they have been able to raise is able to bring in a social enterprise which helps strengthen the whole
Yes.
work on the ground. So there are, I think, good examples on that piece as well. to do.
Absolutely. I
Urja is
completely
one such
agree with you.
example.
Yes.
I think I didn't understand the superpower question, but I'll still answer. But the first part, when you're comparing with the microfinance institution, I think it's very inappropriate to compare because a microfinance is very well known for zero agency, right? So there's no comparison at all. When it comes to superpower, I think I'm not sure if you understood what I was referring to. Essentially, when you lend, you can sign up, by the way, you can sign up, and when you lend to anyone on the platform, even though you're lending as an individual, the person gets a credit score, right? Now, they get a credit score based on their behavior, repayment behavior. It has got nothing to do with how the product has been underwritten. They're two different things, right? You could do a cash flow based, and actually, because we do cash flow based lending, it enables good repayment behavior. Yeah, exactly. And therefore, they get a credit score because it's regulated by RBI, so they get a credit score.
I guess we have enough now things to work on as a community. So can we take it after? Yeah. So the panelists are all here, and we will have lunch now. So the idea is to, whoever has further discussion points and questions, can you please kind of, whoever is around. And yeah, I think I'd like to conclude that. Thanks a lot to the panelists, and thanks a lot to Clean for helping organize this. Over to you.
Thanks. Thank you. So, Pamli, I'd request you to kindly felicitate all the panelists. Mr. Ganesh. Ms. Mahenaw. Mr. John. Mr. Piyush. And I call upon stage Ms. Rekha Krishnan to felicitate our moderator for today, Ms. Pamli.
I'm going to take a minute to quickly thank the WRI team for curating this session with us. And as I was mentioning to Bharat, a lot of owners back to Clean and all of us ecosystem players. We cannot leave it to the financing guys. We need to go get our act together, get O&M going, get servicing going, document all the success stories and the challenges. So it's always back to us.
Thank you, sir. The lunch is arranged at the Charminar IHC, right in front of the Stein Auditorium. And we'll try to reconvene by 2:15 latest. It's a humble request. Please, thank you.